We have a slew of guests joining us to talk to us about the policy as well as the way forward and what we should actually understand from the commentary coming in from the Governor, Nilesh Shah, as always, as well as Mr. R. Gandhi. And Mr. Tewari also joining us from SBI, as well as Radhika Rao, I beg your pardon, is also joining us. Thank you everyone for making time and speaking with us. Radhika, why don't I begin with you, the lady in the panel, to help us understand what your key takeaways were from the RBI governor's statement. Inflation, he did try and talk about in both the manners that yes, it's coming off, but be very watchful of the food inflation.
Hi, good afternoon. I think the overall tone and the commentary wasn't very different from what the central bank, the governor spoke about back in February. I think they are taking comfort from the strong growth momentum. The governor didn't mention about investment being strong, and I think additionally, even consumption expectations are that it will do better according to the central bank's assessment. At the same time, they're looking at what's happening on the inflation front. Certainly, I think if you were to see from between the last assessment and now, oil prices have gone up. There's been IMD's commentary on potentially another weather, heat wave, and so those things have complicated the inflation outlook the bit. So as the governor mentioned about the elephant and walking away for the time being, I think they are looking at 12 months ahead outlook. And if there's anything that disturbs that trajectory, I think tends to concern the central bank as well. So in all, I would think the commentary hasn't changed much. If anything, I think it's kind of affirmed that there is need to remain cautious, on inflation risks while you're being comfortable about growth. And I think the third final bit that I would take away is that while all of this is happening, I think they are aware that because of strong credit growth, because of liquidity swings, there could be potential mismatches, there could be some potential bubbles in the system. And I think they are very wary of that as well. And that's why you have continued to see a macroprudential fine-tuning. So truly juggling quite a few objectives, quite a few goals, but I think they have been prudent in keeping squarely on inflation, which is something that's very important from a policy mandate point of view, as well as some of the near-term developments.
Also bring on board then Mr. R. Gandhi, get in your take, and would you concur with that assessment, that yes, very prudent on inflation, juggling a lot of the balls, but we have the RBI governor who's fairly cognizant of the inflation and growth dynamics in the country.
Good morning. Yes, certainly the policy announcements are as expected. There has been no surprise. See, it is reassuring that in the coming in this fiscal also, the Reserve Bank will be remaining focused on bringing down the inflation. Especially, they will be watching more on the food inflation because that is volatile. So that has been acknowledged, and that's why the bank says that we will be very cautious and monitoring the things very closely. The international situation, especially the oil, there is another sudden change in the oil prices that adds to the concerns. So the Reserve Bank, as usual, ever be vigilant on the oil front also. So whenever there is anything going out of hand in terms of inflation, the Reserve Bank will certainly be taking its own corrective actions. But as of now, the projections are quite helpful, both in terms of growth and inflation. So during the year, we should expect, given the current situation, if there is no worsening issues, then we should be expecting rate cuts maybe then August policy. That will be my assessment. Thank you.
Okay, point taken. Mr. Ashutosh Khajuria also joining us on the show. But let me actually go across to Mr. Tewari to get an understanding. This LCR framework that the governor talked about, what do you think is the importance of that? Because he talked about how we are inching towards a surplus situation in the month of March as well. And overall, this announcement coming in for the small finance bank on the currency derivative side, what's the credence of that, Mr. Tewari?
See, the LCR thing is a very important thing in the whole speech, because we have the example of Silicon Valley Bank in 2022. In one single day, $42 billion was withdrawn, and the next day, 100 billion more was being tried, which was almost 80% of total deposits. So once a bank is under pressure, the definition of LCR of looking at outflows of 30 days, I think in the digital times doesn't hold. So I think this is the point he was trying to make. We have to wait and see how much is the outflow periodicity. Now we have to look at, is it going to be 7 days, 2 days, what? So we'll look at that. But the point is that entire digital system and the ability to withdraw large sums of money instantaneously, if a simultaneous withdrawal happen, a run on the bank can be really fast. People don't have to stand in queues or at the ATMs, etc. So I think that's the point being made, and we'll watch out for what exactly comes in terms of the review. It's an important point which he made.
And overall, in terms of the liquidity situation on the ground, Mr. Khajuria, what's been your understanding?
I think liquidity position, what he is looking at as RBI versus rest of the system. And there, I think the need for VRRR, which is the variable reverse repo auction, suggests that there is ample liquidity. And that this has come in post 30th because of the spending by the government. And it was expected because towards the end of the financial year, you will have more of, the strings of the wallets being loosened and your target expenditures be, completed and all. So I think liquidity being, always had been adequate in the system, and the withdrawal of liquidity that stance continues. And for that purpose, periodically we have the VRRRs and even, term reverse was also to withdraw the excess liquidity. So with the, with oil.
Nilesh, I want to get in your take as well. And much on expected lines, the Reserve Bank has kept the repo rate unchanged at about 6.5%. How is your outlook in terms of the kind of linkage that we're seeing with the overall market? Because while the mid-cap index may have somewhat recovered, we're pretty much status quo. Of course, not very market moving. But do you think that with the lingering, worries about food inflation persisting down the line, that could be a bit of a worry for the market, but otherwise it's pretty hunky-dory?
So the 90th year celebration of RBI had 3 words attached to it: stability, trust, and growth. This monetary policy is reconfirming that RBI's policy will create stability in financial market, trust in financial market, and growth for Indian economy. The equity markets today will be less bothered about food inflation. It's more dependent upon nature's movement. And with monsoon likely to be normal, hopefully food inflation will remain under control. And which is where, if we see RBI's own estimate of FY25 inflation is at 4.5% lower than FY24. I think for equity market, the biggest worry will be complacency. We are trading at a valuation which optimistically discounts many events: election, Fed pivot, earnings growth. All are discounted in a very positive manner. This should not create complacency. Other than that, as you mentioned, markets are in reasonable shape.
Okay, markets are in reasonable shape, but factoring in a lot of optimism already. But just to delve deeper into that, Nilesh, what about the banking sector as a whole? It was fairly muted of late, but the kind of support that you're getting from the RBI and the other decisions, and the fact that there's perhaps going to be a rate cut at some point of time during the year, what do you make of the private banking space right now? And in terms of the cut expectations for the rates, what exactly should those be?
So my feeling is that RBI is unlikely to hurry in rate cuts like US Fed. Unlike US Fed, which needs data to cut rate, RBI has ability to wait because our growth is well above our probably expectations. From the banking point of view, clearly right now, deposits remains very important. And banks which have deposit franchise, which has access to low-cost deposits, they are likely to do well. Today, fortunately, on the asset side, almost all banks, be it private, be it foreign, be it small, be it big, be it public sector, they are looking similar. Their NPAs are fully provided for. Those NPAs are transparently declared. So there is no differentiation on the asset side. Even the growth is converging. The most important thing will be deposit franchisee. Right now, liquidity remains tight. In the month of March, RBI's intervention has relaxed it a little bit, but still liquidity remains tight. And undoubtedly, banks which will have better deposit franchisee and access to low-cost deposit, markets will perceive them favorably.
Low-cost deposit will be favored by the markets. And I just wanted to get in a thought from you as well, Mr. Tewari, as to how you're looking at all of these announcements in light of the banking sector as well. The fact that Nilesh was alluding to the fact that deposit franchising is going to be fairly critical as liquidity is tight. The RBI governor as well talking about how the decade is going to be very transformational with respect to e-rupee pilots that are already ongoing. Mr. Tewari, that question was for you. And if you could unmute yourself.
Can you hear me?
Yes, go ahead.
Okay, so the deposit franchise is the key, as I agree with that view, because we have seen the last 7-8 quarters, the deposit growth has been behind the loan growth, not only in percentage terms, but in absolute numbers as well. So therefore, there has been, and for various reasons, the money has been going to the stock market, to mutual funds, and so on, and the small savings. So with all of that happening, there has been a competition for deposits. And we are with a strong deposit franchise, with our rural and semi-urban presence, I think are uniquely placed. And we are doubling down on this. This is the key. I agree with Nilesh Bhai that this has to be focused on. All the other announcements are actually fine-tuning the various mechanisms, whether it is the derivative hedging capability to small finance banks, or the deposit of cash by UPI in the CDMs, all of that. So I think for all banks, especially the deposit gathering and the focus on that will be the key thing for the next several quarters.
I guess that's what you would be putting your head to at the SBI as well. Thanks, Mr. Tewari, for making time and speaking with us. But Mr. Gandhi, what's your take? Do you think RBI is getting a lot more, conscious of the rate cuts and being a lot more considerate than it should be, perhaps, because they've managed the entire inflation trajectory a lot better than the rest of the globe? Do you think we could perhaps be the first on the rate cut cycle as well?
Hello.
Yes, Mr. Gandhi.
Hello, can you hear me?
Yes, Mr. Gandhi, we can hear you. The question is about the rate cut trajectory. India be the first, perhaps, to do that? And are you expecting that soon?
Rate cut in this.
Okay, I think we have a very patchy line, Mr. Gandhi. We'll try and reconnect that, but let me toss the same question to Mr. Khajuria as well. What's your own expectation of the rate cut trajectory going forward in India?
I think there was reiteration by the Honorable Governor on the inflation target, and said, I think it is within the band, but the target is 4. And when you are projecting CPI of 4.5% for the next financial year, I mean the current financial year, which has started recently, and the lowest is Q2 at 3.8%. I don't see there it should be hurriedly done or so, and that's what the expectation by the market is. If at all any cut happens, policy cut happens, that may happen in the second half of the financial year, and that too with further projections seen on the CPI. So I think right now growth also is better than the expectation, and therefore I think hurriedly cutting the rate should not lead to once again falling into that inflation trap. So I think price stability is something which right now would continue to be the prime focus, because growth is taking its course. So I don't see we would be the first in line your question suggested, probably happened earlier in US or in European zones and all.
Mr. Gandhi, we had a bit of a glitch with your audio. If you could go ahead with your chain of thought, you were telling us more.
Yes, as regards rate cut in the coming policy announcements, we should be expecting some time by
to be facing a bit of an issue yet again. Radhika, let me come to you in terms of what the potential trajectory could look like when it comes to the Reserve Bank.
Yes, certainly, I think the dominant view is still, you generally would need to remove a combination or remove how much has tightened based on some justification. So at this point, I think if you see how the economic landscape is panning out, globally, the central banks are still, there's large uncertainty on when and if what point central bank cuts are going to start, particularly from the US Fed. I think that's number one globally to point out, to look out for. And domestically, inflation is still above target. I think while the second projection has been dialed down, if you see 12 months from now, we are still looking at above target inflation at about 4.6, 4.7%. So that's the inflation front. On the growth front, there's a lot of optimism. So obviously there is no need to stimulate the economy further through rate cuts. And you've already seen how credit growth has been doing. If anything, there's a push to raise deposits to be able to fund that kind of credit growth. From all these angles, I would think that the central bank would not really see the pieces stacking up to justify a dovish pivot. I think if anything, one justification could be that the real rates are high, in the sense that if you compare the repo rate 12-month forward to where the inflation forecast is again 12-month forward, it leaves you a buffer, I would think, to do a 50 or a 75 basis point cut at the most. But other than that, if you just look at the economic indicators, I don't really see any reasoning for the central bank. And I think you can see that in the commentary as well. Haven't really touched upon a possibility of easing, unlike some of the regional central banks that we are noticing here, whose currencies are under pressure, and in rate cuts, they might be even considering rate hikes. My final point is also two other events. I would think, in fact, three events that they would look for over the next 2 quarters. The first one, of course, a smooth political election cycle, followed by how the southwest monsoon progresses. I think that becomes important. There is a US weather agency has spoken about a possible shift in El Nino becoming neutral and La Nina taking place, which better for our own southwest monsoon. And the third one, of course, would be the index inclusion that happens in the second half of 2024. These are some of the events we would think, some milestones that they would watch out for before changing their stance or exploring rate cuts. I would pretty much think it's a late 2024 story, calendar 24, rather than in a rush to either preempt the global central banks or the other regional peers.
Summarize there, better to expect it only at the end of this year, perhaps, a rate cut. Thank you everyone for joining us today. Mr. Gandhi, Radhika, Ashutosh Kujur, as well as Nilesh and Mr. Tewari. Appreciate your time today on ET Now. But the markets are clearly liking the policy, even if there was no big action or change in stance. The Nifty is at the highest point of the trading session. We are scaling back at that 22,500 mark, and a big recovery at play as far as the banking sector is concerned as well. Quickly wanted to highlight a couple of these small finance banks because there was a specific announcement for them. So EU Small Finance Bank is reacting positively, and even the likes of Equitas Small Finance Bank, etc., will come up for you on the screen, and Ujjivan too. A bit of a recovery from the lows of the day. So some of these stocks deserve mention. But with we are wrapping up the special coverage of RBI monetary policy decision. We'll see you shortly with more market updates.
If you like this video, then like, share and subscribe to ET Now.